Welcome to today's market report. European stocks rose on Wednesday with economically sensitive sectors such as energy and banks leading the gains as investors braced for a Democrat win in crucial US Senate runoff election in Georgia that could drive bigger fiscal stimulus. The Pan-European STOXX 600 index rose 0.4%, while UK's FTSE 100 edged 0.8% higher, while Germany's DAX gained 0.3%. Oil majors BP, Royal Dutch Shell and Total gained as crude prices rose to their highest since February 2020 on Saudi Arabia's pledge to cut output more than expected in a meeting with allied producers. Banks advanced the most, up 2.5%, while other cyclical sectors such as automakers and insurers added more than 1%. While the final votes are yet to be counted in the runoff elections, markets appeared to price in a blue wave that could usher in larger fiscal stimulus and pave the way for President-elect Joe Biden to push through greater corporate regulation and higher taxes. In Europe, a pullback in healthcare, food and beverages and tech shares capped gains in major bourses. Crude futures were up 0.9% to $54.09 per barrel, the highest since February last year. WTI futures climbed as much as 0.6% to $50.24 per barrel, the highest since February as well, before slipping to $49.96 per barrel. Gold futures were up 0.13% at $1,956.65 per ounce. On the FX front, the US dollar witnessed some fresh selling during the early European session and pushed the GBP-USD pair to two-day tops around mid-136. The pair quickly reversed an intraday dip to sub-136 level and moved into the positive territory for the second consecutive session on Wednesday. The uptick also marks the fifth day of a positive move in the previous six and was exclusively sponsored by the emergence of some fresh selling around the US dollar. Hopes for a strong global economic recovery in 2021 remained supportive of the underlying bullish tone in the financial markets. This, along with speculations that the Fed will keep rates lower for a longer period, undermined the safe haven greenback and further extended some support to the GBP-USD pair. Bourses seemed rather unaffected by concerns about the economic fallout from the imposition of a third nationwide lockdown in the UK, which might have raised prospects for additional policy easing by the Bank of England. Nevertheless, the USD price dynamics remains an exclusive driver of the GBP-USD pair's intraday positive move. The UK Vaccines Minister Nadim Zahawi said on Wednesday the vaccine target set by Prime Minister Boris Johnson is very stretching. However, he said that they are confident of reaching the target. The GBP-USD pair trades 0.2% higher at 146.50 on the back of the news. The ULB suggests resistance at 137.10 is unlikely to come under threat. 136.60 is already quite a strong level. Support is at 135.90. Euro-dollar is losing ground with the risk sentiment weakening on increased expectations for a Democrat-controlled US Senate. The currency pair is currently trading at 122.88, having reached a high of 123.27 earlier today. That was in the highest level since April 2018. The pair has failed to keep gains above 123 in each of the previous 4 trading days. Euro-dollar may extend losses if the risk aversion worsens during European hours. According to the UOB, upward momentum is beginning to improve and the euro appears poised to move above the 123.09 peak seen earlier this week. That said, 123.30 is another strong level, and it is left to be seen if the euro can move clearly above this level. Support is at 122.75, but only a break of 122.50 would indicate the current upward pressure has eased. The US dollar took a breather from its steady descent, but could not entirely escape selling pressure in Asia on Wednesday as traders looked to the outcome of a Senate election in Georgia to drive the next move in market sentiment. The dollar has dropped through a major support level against the Japanese yen on Tuesday, and it briefly extended lower to a new 10-month low of 102.6 on Wednesday before steadying. The Australia and New Zealand dollars kept pressure on the greenback and hovered just below multi-year highs. The dollar index hit a fresh 2.5-year low on Wednesday before firming at 89.575. This is today's market news. Thanks for listening. We'll see you next time.